All right, so I made $2,000 the other day within a few hours, and here's how. So the bulk of it came from this one US 30 trade. There are other trades that I took on the day, so here's what those look like. Okay, so here's a trading journal for the live account that I'm on, and all the trades are documented, including these trades from April 22nd. So there's this indicator that I have that kind of shows generally what the Elliott wave patterns are looking like at any point in time. This indicator is useful, but I don't only rely on it. I also look at price action. So looking at wave 3 into wave 4, the 1.618 projection was around this level 38,277. Then there's a daily level around 38,345. I'll just zoom out to show how that's significant, because that was a high from Monday, April 15th, right around that hour of the New York Open. Keeping that in mind, I saw that Sunday into Monday, price went higher and then lower by the time it was New York Open. So around the New York Open, there were two lows that formed. Okay, now the second low was significant because it came after this wick had already gone into this area of imbalance and before any candle had gone into this second smaller area of imbalance. So I entered with that thought that we would at least push past this area of that imbalance. And we ended up pushing higher into that daily level right away. So that trade lasted from roughly 10:45 until 1:45. So in 3 hours, you can make that much if you're on a funded account. Now, this isn't something you can rely on every day, but if you're trading this on a personal account and you want to be part of these moves, you're going to need to use a very small lot size. The amount that you gain is going to be a lot smaller. That's why it's important to leverage these accounts as tools. So here's a trade on EU. Sunday, price went a bit bullish, went bearish on Monday. So I was looking to see if we could get that movement back to the upside. All right, so zooming into the 5-minute chart then, there's an area of imbalance left by this bullish candle. And so I wanted to enter, making sure that if we went below this bullish candle, that I'd be taken out. And so there was a bit of retracement into this area, but then price continued to go up into this area of wicks. And so that was only 7 pips. But look at the amount that can be made with 7 pips on accounts of this size. That again just shows the importance of having access to these accounts. You can use a small lot size, you can get a smaller amount on your personal account, but it won't be the same. So now with GA. GA started out the week with the bearish move, then went bullish during London, and then by the time I got up for New York session after London, it was already bearish pretty significantly. So Monday, there were 2 lows near each other. Now what struck me here was that the second low had this bullish push that came after it. Clean traffic, okay, imbalance. Then there was a bit of a retracement. So I entered off of this retracement because there had been a chance for price to go back down into this area. Now it didn't actually get all the way down there, but my stop loss was beneath it just to keep myself protected. And so I was looking to get into this area of imbalance that was left on the left and simply take some profits. And so that was 19 pips of profit with that bullish momentum before price then consolidated for the rest of the day. So these are the types of moves that can be really useful for getting in and out of the markets. You don't want to be in there all day, so it's really important to focus on timing and focus on when the markets are most active, typically around session opens and closes. Again, with all these trades, it's really important to remember that the account size is going to dictate how much of the profit you can actually get if you're trading sensibly. That's it. Just wanted to show that. And if you have any questions, let me know, and I'll see you in the next one.